And we're live. Happy Wednesday, everyone, and welcome to the Mojo Show, where your real estate podcast, where we talk everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're going to wrap up our 6-part series on decoding mortgage programs. The last 5, while we've covered a lot of material, but this week's episode, we are focusing on mortgage programs for veterans and active military service members. But before we get to that, Joe, I got a week ago, boy, did we get hit.
Yes.
Here in Houston.
How long were you without power down there? Because I know there's still they're trying to get to 90% right now on people having power again.
Yeah, last time I checked, I think it was Monday. I checked, there was still like 350,000 people without power. They hit the hurricane hit Monday morning, we'll say, last Monday morning, and we lost power. Boy, I want to say maybe it was around 10:30 Monday morning.
Okay.
The winds that were so high, good 70, 75 miles an hour going on, but we didn't get power back until Wednesday.
Okay.
It did flick, it was strange because it did come on, and like, I want to say an hour later, boom, they turned it right back off.
Well, you're on the north side of Houston. I think Lisa Puckett, which is one of our LOs, down there too. She's 4 days without power. So, that's ridiculous with the amount of things that we need to prepare for. But I know when we lived in Houston, went through a couple of hurricanes down there, and the power lines that, everything's above ground now.
Yeah.
And so that 75 mile an hour wind coming through, and I know was it considered a class 1 hurricane?
Yep. Yeah. It was class 1. The eye of the storm went right over us, it was, which of course I got to learn about hurricanes because this is the first one I've been through, right?
That's what I was going to ask you is, coming from Michigan, was this your first experience with it?
Yeah, it was, which, it was just, thankfully it was just a, class 1 hurricane, because it's just wind and rain, really heavy wind, and that wasn't to me that big of a deal. Of course, it took power out and stuff, but I'd hate to be in a class 4 or 5. Boy, that would be wow.
Yeah, the amount of wind that you get, but that kind of, today that leads us into, the people that go down and help during those situations, right? Our first responders, our military, Coast Guard, especially down in the Gulf area. So I think that kind of ties a lot of that support to today's show, which is awesome too. And that just came to me. So
good segue.
But the one thing that these linemen that are down there working on the lines and stuff like that, a lot of these are from different parts of the country coming in to do it. And on the news today they were talking about just some of the upset people that live down there, and I get it. But these people are there to try to help. They can only go so fast. They can only do so much. So just they're there to help. But thank you to all the people that travel down and all the linesmen that are out there and all of our first responders, because they save lives. And that's the nice thing about, their duties. So
absolutely. A big hat off to all of the linemen. As in the past week driving around, I've seen so many of them, and, license plates from different states, Louisiana and stuff, that have come in to help out. So a big kudos to them in helping the Houston area in getting power back. But we were fortunate to only be out, without power for 2 days. We were fortunate. There's still people that don't have power after a week. That's just beyond, right?
Well, hopefully they can get to cooling areas and things like that. I know they're set up. Don't be too proud when it gets this hot. Get out, go cool off in a spot that's set up to help you guys. If you are without power still, and if you're without power, you might not be watching us on Facebook Live or on our YouTube channel. But hopefully everybody's staying safe. And we have a fun show today. I'm excited, Joe. So I'm going to let you kind of do the intro for our guest, and then we'll bring him.
Joe, I'm super excited about who we have for a guest on our show today. Super excited. He's a graduate. I'm not going to say what year he graduated from this, because I don't want to give his age away. So we'll borrow that from him. But he did graduate from the United States Military Academy at West Point. He spent 8 years as a UH-60 Black Hawk pilot and commanded a company in the 101st Airborne Division. He has spent almost the last decade in the mortgage industry and has become an expert, truly an expert that we all lean on in VA loans, and has been recognized as the top VA loan originator in the country by Scotsman Guide in just 2023 last year. He is the National Director of Military Lending for U Mortgage. He is so passionate about educating realtors, loan officers, and borrowers, homeowners, about the power of the VA loan. So please welcome to the show, everyone, Patton Gade.
So, Joe, you didn't give it away by giving the year, but then I showed up on screen and I give it away with all the gray and whatnot. So
we all follow that. So, we got the grays going on. It just makes us look more distinguished. So
I guess so.
Well, Patton, thank you for coming on. Tell the viewers a little bit about yourself. I know Joe did a great intro, but tell them something, else about you, and let them know who you are.
No, so like you said, I'm passionate about VA loans. VA loans are what I do. It's what I literally have dreams about VA loans sometimes. I'm married, got a son that's 11. He's going to be a great mortgage officer someday. We're starting to teach him. He's heard so many conversations over the last 10 years. Basically his whole life I've been in mortgages, so he hears all the conversations all the time, and I'm really looking forward to getting him integrated into the business at some point. But VA loans are what I do. It's what I think about all the time. It's my passion. It's kind of my hobby too, so people ask me, like, do you golf? I live in Phoenix. I don't really golf. I'm like, what? My hobby is mortgages, and my hobby and my passion is taking care of our veterans in the best possible way that we can. So
that's awesome. And I get the part with the kids. I have 2 of them, and I've been in the industry for 24 years, and they know nothing but dad's on the phone and I'm talking mortgages for something. So they did both tell me they don't want to be in it though. So
yeah, to my wife's great chagrin, when the phone rings during dinner time and you're like, oh man, I really need to,
yeah.
Work-life balance. Sometimes it's a challenge.
That's very true. And one, the success track that we did up there at UWM a couple of weeks ago. Thank you for putting that on. That was Absolutely. Awesome learning. And one of the things that was just a rolling theme was the passion of why VA loans are important to military men and women. And the benefit of it. Can you kind of explain that in your own personal opinion and also for your clients?
Yeah, you know what? At the end of the day, the VA loan is absolutely the most flexible and the most powerful loan program on the planet. But the problem is that only, I want to say the number is something like 15%, or maybe just a hair under that, of veterans have actually used a VA loan. And there's a lot of reasons for that. There's an education gap for the borrower themselves. There's also an education gap in loan officers. Like something like 95% of loan officers do less than 3 VA loans each year. And so it can be an intimidating product because there's some nuances to VA loans that maybe people don't really know. And then the third aspect of it is that realtors themselves are a little bit scared of VA loans. Maybe they've been burned in the past. What I always tell people is, like, the reason that there are a lot of myths around VA loans is probably because the loan officer themselves didn't really know what they were doing. And so when they originated the loan, they thought, okay, the rule is this, the rule is that, whatever it is. It gets to the underwriter, and the underwriter knows for sure what the rules are. When the underwriter then says, oh, no, you messed this up, the loan officer then, they got to blame somebody. And very few loan officers will actually take that responsibility on themselves and say, oh, wait a minute, I messed up. And so what people have done over the years is they go, well, the VA said, the VA denied your loan. And well, heck, the VA never even sees the loan until after it's closed. So it wasn't the VA's problem. It was a problem at the beginning with the origination and, you know, the initial stuff. But loan officers have just blamed it on the VA. And so now people have this thing in their head where, oh, the VA is so hard. VA loans are so difficult. The VA loans this and that. And it's just kind of built on itself over the years. So right at this point, we have to fight against just the misinformation that's out there. I mean, I see stuff on TikTok, I see stuff everywhere, and I'm like, man, that's just wrong. You know, so it's educating the customer, it's educating loan officers, and it's also educating the realtor on how powerful this program is.
Yeah, you know, the education part is the biggest with the loan originators. And I think a lot of the misconceptions of VA loans too was getting a COE. A lot of loan officers weren't getting COEs to do a pre-approval.
Yeah. Yeah.
And I think a lot of that backlash came up, you know, through the years because I've seen it change. But it's so easy now to actually order a COE, which is the certificate of eligibility for anybody that's listening. Oh, thank you, Joe. I forgot to do that. You know,
up there.
Anybody watching, listening, stuff like that, please drop. Hey, there's Jay.
Yes.
You know,
the man, the myth, the legend.
Yep. So, Jay, thanks for listening. But the COEs, to order those now is gotten so quick and so on time that if any loan originator out there is doing a pre-approval for a veteran, if you're not pulling that COE right away, that is a downfall that I think that LOs are not doing properly.
Well, that's a big part of it, right? I mean, it takes 30 seconds. It literally takes 30 seconds for me to jump on the VA website and pull a certificate of eligibility for somebody. Mm-hmm. And I see it all the time. You know, people will go, hey, you know, I was in the, you know, I was in the National Guard, or I served in the Army. I want to do a VA loan. And people be like, okay, you're pre-approved. And their numbers all look good. But then when they pull the certificate of eligibility, they find out that the person had a bad conduct discharge. You know, they got thrown out of the military after a year and a half or something. They just didn't have the time to actually be eligible for a VA loan. And that should have been caught at the very beginning. And now you've got somebody under contract, and, you know, it's a big mess. And so we see those kind of messes all the time from other organizations, and COE is the building block of everything.
Mm-hmm. Yeah. Is there any tips that you have when it comes to the COE? Let's say, you know, you've probably dealt with this a lot. National Guards, is there anything that they need to know that's, you know, quick for them to understand on that piece? Because that's the one that I think is the most difficult, is somebody from the National Guard trying to make sure that they're qualified.
Well, let's break it down a little bit. So if you served previously, let's say you're out of the military, you served 10, 15, 20 years ago. As long as you served a full 2 years active duty, you will be eligible for a VA loan, and it'll be, your eligibility lasts for your entire life. So some people have thought, it used to be like back in Vietnam era, the VA loan benefits expired 10 years after you got out of the Army or Navy or whatever. And so, but they changed that. And so now those benefits never expire. So that's one thing. Number two is, if you were in the National Guard or Reserves and then left, you have to have served at least 6 years, or you had to have been activated to active duty for some sort of deployment. So we have a lot of active duty, or I'm sorry, a lot of Guard and Reservists who were activated through the Iraq, Afghanistan, all the conflicts that we had over the last 20 years. So those folks, a lot of them got called up and served 90 days or more on active duty, and they will be eligible as well. So the key, so two keys: 6 years if you were National Guard or Reserves and never got called up, or if you got called up for 90 days.
Okay. Interesting.
I know that was off script for you, Joe, but it was rolling off my tongue.
It only took 12 minutes for you to go off script.
Hey, there you go.
That's pretty good. Pat, I want to talk a little bit about what you had mentioned a few minutes ago in regards to, you know, just some myths in the education with realtors and LOs and that. One of the myths I see a lot, and by the way, when I talk about myths, I'm talking about, you know, like the Loch Ness Monster or Joe shooting under par, you know, myth.
Oh.
Right? But there is, you know, one of the myths out there with VA loans, and that is the appraisal itself. That is very difficult. I mean, they put it at the level of like an FHA loan, but that's not how it is.
No, the VA appraisal process is actually, I believe it's the best process in mortgage. And here's why is, we order the appraisal, it goes through the VA system. So we just jump on the VA website, type it in, boom, and the VA assigns an appraiser. So there are a couple things about that. Number one, a lot of people are like, oh, I know the appraiser, I'll get a rush on it and stuff like that. That's not how it works. VA, you can't do a rush and you can't pick the appraiser. So it just goes to the VA assigns somebody. Now the appraiser goes out and they start looking at the property. As soon as they have a thought that the appraisal might come in below value, they issue what's called a tidewater notice.
Right.
So the tidewater notice is they let us know, we let the realtors know, and we go, okay, we've got 48 hours now to get some comps from the realtors and to give those to the appraiser. So the appraiser is basically saying, look, it's not going to come in. Can I get a little help here? So what other loan does the appraiser come to the realtor and go, hey, I need a little help getting the value?
Right.
None, right? So that's the first thing is we have an opportunity to influence the actual appraiser and the appraised value through giving them some good comps. Now let's say, and a lot of times, when we give them the comps, the appraiser comes back and goes, oh, we just had one yesterday where the appraiser came back and went, you know what, you're right. I should have been able to get to the value. Here's the appraisal at value. So the tidewater process works. But let's say the appraiser still comes in and says the appraised value is a little bit low. Mm-hmm. Now what you do is you can do a reconsideration of value. And so you get some other comps. You get a note from the veteran themselves that says, hey, I think this house is worth X. And we go above the appraiser's head. We go directly to the VA, to their staff appraisers, and we go, hey, take a look at this value. And they're going to reevaluate everything and hopefully give us a good value at that point. So you have two opportunities to influence the value.
That's actually new. You just taught me something new because I didn't know that you could actually do the reconsideration directly to the VA. I always thought it went directly back to the appraiser. So that was something that I didn't know, and I've been doing them, like I said, for 24 years. So there's always something that you can learn about, these myths by listening or just talking. And, you do a good job at making sure you bring that to the light to everybody here at U Mortgage, and we appreciate that. So, but, still on the myth, on the appraisal piece, the one thing that I don't see a lot is, them pointing out every little like minor crack and things like that. And that's one of the big things I think realtors don't understand is the appraisers are going out there just to make sure that the house is in great condition for the standard of the age of that home, not going out and saying, oh, there's a crack here. Now this has to be fixed. And I think they think VA appraisers are more like home inspectors. And it's not that much of a difference between a conventional appraisal and a VA appraisal, in my opinion.
No, it really isn't. The VA does have their MPRs, the minimum property requirements, right? And so there are a couple things that tend to pop up maybe a little bit more on VA loans, and that would be like peeling paint, right? So that's one thing that kind of is a little bit annoying about the VA appraisal. But when it comes to the other thing that people talk about all the time is, well, VA, the value comes in low all the time. Well, number one, it doesn't. We talked about the process to make that happen. But when you think about it, the VA appraiser is not, they don't work for the VA. They're just an independent guy or gal out there doing appraisals. And the interesting thing is today they may do a VA appraisal. Tomorrow they'll do an FHA appraisal. The next day they'll do a conventional appraisal. So they're out there, they're doing all these different types of appraisals, and they are really using the same methodology to come up with the dollar value for these properties. They're looking at comps in the local area that's sold in the last 6 months or 3 months or whatever. It depends on how hot the market is, how far back they have to go. But they're using the same methodology. And when they look at something that's got, a 3-bedroom, 2-bath as opposed to a 3-bedroom, 2.5 bath, they're making the same adjustment for that extra half bath. Mm-hmm. So the value, it really comes down to that person's opinion. And frankly, if they were doing a conventional appraisal on this property, they're probably going to put the same exact dollar value on it as if they were doing a VA appraisal. So it has nothing to do with it being, oh, this is a VA appraisal, it's going to come in low. It's the methodology that particular appraiser uses.
Yeah, I agree with that. And then when it comes to, the knowledge of VA loans, everybody thinks you can only have one, right? Huh.
Yeah.
This one came up at the success track. Can you kind of explain the myth about only having one VA loan and kind of how that is not true?
Yeah, so I've seen people with up to 4. I don't know if I've ever seen anybody with 5 active VA loans, but I've seen 4 active VA loans all at the same time. And so really it becomes, you just got to know the methodology and how it works. And I'll give you a quick synopsis of it. So the county loan limit in most counties in the United States is $766,550. So let's say you went out and bought a $250,000 house. You have not used anywhere close to the $766,000 of eligibility that you have.
Mm-hmm.
So you have that one house and you bought it for $250,000. Now you move somewhere, you PCS, or you just happen to move across the country for your job. You can keep that house for $250,000 and you still have $516,000 of VA eligibility left where you can buy with no down payment. So now you move somewhere and you buy a house for $300,000. Well, now you have $550,000 used and you still have $216,000 left over. And if you moved again, you could actually buy a third house and you could go 0 down payment at $216,000. And then when you go above the $216,000, you would just have to put a 25% down payment on that delta between the $216,000 and let's say $316,000. You would have to put a $25,000 down payment on that $100,000 delta. So you can actually stack numerous VA loans. And that's one of the things that makes the VA loan so powerful is now you've got potentially 2 or 3 or even 4 houses with VA loans that have to be your primary residence when you buy them, but they can then become a rental property as you move away. And now you've got, potentially 0 down, you bought 3 houses. Well, heck, now you're hopefully cash flowing those as rentals and all the benefits of gaining that appreciation and whatnot. I mean, what other program can do that?
Well, and you brought up a great point there because I just helped a active duty Army. He moved from Colorado out to Louisiana, and they bought their first house in Louisiana. And he was asking me, if I get transferred again, do I have to sell it? And I told him no. And on the transfer, I told him you could keep that as a rental because there's going to be other people that are around that base that maybe have a family and can't buy. Now they're renting from an active duty veteran, or not, excuse me, an active duty military person that knows the area. And it just helps with that networking of it. And I really liked that part of it. And so thank you for kind of talking about how many loans somebody can have. But, you did bring up a good point. It's not always you have to transfer, but you do have to live in it as your primary for 12 months minimum if you're not being transferred before you can buy again. Is that correct?
Yeah, that's right. Now, the VA says you have to have a qualifying change of circumstance. And it's a very gray area. They don't put any specific reasons on what that change of circumstance could be. But let's say you bought, a small, 2-bedroom, 1-bath place or something. And now, you fall in love and maybe she's got 3 kids already and, you're going to get married and now your family is much bigger. That happens, right? And now you're not going to, a 2-bedroom, 1-bath just isn't going to cut it. Right. So that would be a change of circumstance where you could have only lived in that house maybe 6 months. And now I really need to get a different house. And the VA is going to go, okay, I mean, that makes sense, right? You're not, the VA loan program is not designed to let you, it's not designed for you to build a rental empire.
Right.
But it is a great tool to build a rental empire used the right way with the right rules.
Yeah.
Wow. One of the things I also wanted to just kind of bring up and have you explain a little bit for, especially for realtors, because I think this is one of the things that realtors are afraid a little bit of, VA buyers, VA loans, which I think is so unfortunate when I see a listing for a home that doesn't accept VA loans. I think it's ridiculous to segregate that out. But a lot of people feel that VA loans are actually harder to get through underwriting than other loans.
I would tell you that they're actually the most flexible loan product. First of all, there is no debt to income requirement. And so I've had approvals at 60, 65, even 70% debt to income ratio. What the VA looks at is a thing, and they don't look at the debt ratio. They look at what's called residual income. So essentially based on your family size, they go, hey, at the end of every month, you need to have X amount of dollars left over. and they put a number on that, and there's some calculations that go into it based on family size, based on the square footage of the house, things like that. But they're looking at the money left over at the end of every month and going, okay, can this person afford to buy food at the end of the month? And so it's not this hard and fast, you got to be at 45% debt to income ratio or 49% or 54% or whatever. It's kind of a wide open thing, and it allows some flexibility. Also, it's much more forgiving from a credit score standpoint. So, there is no, you have to have X credit. The VA, as a matter of fact, doesn't have a credit score at all. Now, the lender that's lending the money is going to have a credit score requirement, but a lot of lenders will go down to 500 on a credit score and still be able to make a loan work. So it gives you a lot of flexibility for things that may pop up and go, oh man, we didn't know. There are things that happen in a mortgage where no matter how many questions you ask up front, things pop up in the process. But the VA is so flexible that you're much more likely to be able to get this loan to closing with a VA loan than you would be for a conventional loan.
I think one of the things that makes them, people think they're harder is because we didn't do a great job as a loan originator getting the information up front. Somebody coming directly out of the military, you got to tie their new job kind of to what they were doing in the military. People don't understand that in the beginning. And I think that's where some of that misconception comes in. And so, doing a better job on your 1003, making sure you understand the work, when they came out and all that stuff, that helps alleviate a ton of the underwriting conditions.
For sure.
The other one, the big one that I think people misunderstand is the maximum loan size. Like you talked about earlier, you were saying that county loan limits, but explain the difference between the county loan limits when somebody's using a secondary VA entitlement versus if you haven't used your entitlement or you have full entitlement. What's the max loan that you've done or that you've seen out there?
Yeah, I mean, I've seen VA loans in the $4 million range with no down payment whatsoever. So if you don't have any VA eligibility currently used, so currently used would be you have a house that currently has a VA loan, or potentially if you'd had a house previously that had been foreclosed upon or short sale or something like that, where some of your eligibility got burned. If you have no eligibility used at all, you can do a VA loan for whatever you can qualify for from a payment standpoint. So the biggest loan I've ever done is $4 million. And I've done a number of those, 0 down payment, $4 million. Like, I mean, what other loan program is there? And generally, like, if you're buying a house with $4 million and qualifying for that payment, you probably make a little bit of money. I bet you have some money in the bank, but when you're talking, a 5 or 6% or even a 7% mortgage, like if I leave $1 million that I would have to put in a down payment, if I leave that invested somewhere, I might be getting 10, 15. I mean, the S&P 500 this year is what, 17% so far? Like, I'd much rather have my money staying in my investment account earning 17% than putting a down payment on a house to avoid a 6.5% interest rate. So it's great for the borrower in that respect. And it just, like I said, a ton of flexibility, and there is no loan limit if you don't have any VA entitlement currently used.
Yeah, that's the big one, is those larger loans. You can do them, and knowing that is the best thing.
Well, and that's new as of January 1st of 2020, when President Trump signed the Blue Water Navy Act. The part of it was that it removed the cap on VA loans. And so there are a lot of realtors that may not know that. And so I talk to people all the time, and they're like, well, you can't do, this is a $1.7 million property. You can't buy that with a VA loan. I'm like, no. Like, trust me, you can, and we can do it 0 down. Like, you can accept this offer. And so getting on the phone with a listing agent is key, and letting them understand, like, look, I know what I'm talking about. Here's why. Let me give you the proof.
Yeah. And Joe, that kind of goes back to your point where you see listings that say they're not VA eligible. Having that conversation with them, it could be what Patton just said there. They just don't understand that $1.5 million home can have a full VA loan on it, because they're thinking, oh, they have to put $400,000 down. So that's the big difference. So that's awesome.
And I know we're starting to run out of time. I do want to try to get one more question in, but even though we're starting to run out of time, anyone that has questions, I mean, you've got the guru of VA loans on our show right now. So if you've got questions, post them below. We'd love to still answer them. we'll make time for them. But I do want to ask Patton, because there's kind of a misconception or myth, as we're talking about, that the sellers must pay for the veterans the fees.
Yeah, that's not true. So it used to be, until a couple of years ago, it used to be that the seller had to pay for like the termite report, or the seller didn't have to pay for it, but the buyer could not pay for it.
Okay.
And then there's some, there is a thing called VA non-allowable fees. And the VA non-allowable fees only kick in if the lender is charging a 1% or more for the origination fee. And so the way the VA looked at it is, hey, if the lender is charging this fee, then they should be covering all of these other fees, some of the title fees and whatnot. So, but most lenders don't charge a 1% origination fee. And so there are no fees that the seller has to pay for. So that's a myth, but it's, you know, it was common back in the day that you would see that pop up. But I mean, frankly, I just haven't seen anybody that's charging more than 1% origination fee generally.
Yeah, and right now, the way that we're set up, you know, we don't have a ton of fees out there that would be, you know, over that 1%. So not charging that one origination makes it a lot simpler to stay under it. So that's get away with that myth pretty quick whenever people stop charging origination. So
good stuff. Well, we are out of time, but Pat, I really thank you so much for coming on our show. We so appreciate all your insights you're able to give to our listeners out there. If anyone has any additional questions or that for Patton or Joe or myself, Patton, what's a good way for people to get in touch with you?
You know what? My cell phone's always on, and I'll say this to any realtor that's out there that happens to listen to this, is that you know, I'm available. You know, let's say and you're in a VA loan transaction and something is going a little goofy, and you're getting, you know, the loan officer may not know what they're doing, or, you know, whatever the case may be, and you have a question on VA loans specifically, call me. My phone number, 623-866-3974. I will pick up the phone and I will answer any question. My heart and my passion is for the veteran themselves. Okay, so regardless of what's going on, if I can help you steer and fix your transaction, I don't need to do it. I just need to help you fix it so that the veteran can be served in the best possible way. That's my heart, and that's what I'm here for. So feel free to reach out to me at any time. And then my email address is pgade@umortgage.com.
Okay, we'll put that in the comments on this, so that way people have it. Not the cell phone, but the email for sure. But Patton, thank you so much for coming on. And, you know, anybody that reaches out to him, he is serious about that. He answers us right away. He wants to take care of veterans, so he is not just giving you false information. That is his passion. So thank you again.
Absolutely, my pleasure, guys.
Well, next week, we're going to start a new series focused on the recent NAR settlements and what that means for realtors and for you home buyers out there. So be sure to tune in next week at our usual time, Wednesday, 9 a.m. Central. Do want to thank everyone for tuning in. I saw a lot of people, you know, thumbs up and everything. I so appreciate that. If you want to catch any of our past episodes, go to our YouTube channel at The Mojo Show Real Estate Podcast. And while you're there, please hit the subscribe button, because we are on a mission to get to 1,000 subscribers by the end of the year. Besides that, Joe, before I close things out, any last comments from you, sir?
No, just thank you very much. Thank you very much. And I'm glad you have power.
Well, I'm Joe Mortgage, and that handsome guy with a beard over there is Cup of Joe Mortgage, and we'll see you next week.